Welcome back to the channel. Today we're going to discuss an important question. Should you work with investors to fund your first few property deals? If you're new to property investing, this is something you've probably heard before, but it's crucial to understand both the advantages and potential downsides before diving in. As a new property investor, you might be considering partnering with other investors to fund your first deals. The typical structure of this partnership is a joint venture or a JV, where someone with capital brings the money and you bring your skills in finding and managing the deal. In return, you split the profits. It sounds like a great way to get started, especially if you don't have the funds to make your first purchase. However, while it can be an excellent way to enter the property market, there are important considerations that property experts don't always talk about, especially when you're just starting out and you don't yet have experience or equity behind you. Let's face it, if you don't have a proven track record, raising money from investors can be a challenge. Without experience, you might spend a lot of time searching for investors, time that could be better spent learning the ropes of property investing and building up your own capital. It might seem appealing to raise funds from others to speed up the process, but if you focus solely on generating money through investors for your first deal, you'll miss out on valuable lessons that could come from doing things yourself. The hard work and determination required to build your own capital and fund your first investment will teach you life lessons that are essential for long-term success in property. By relying on someone else's money, you may get into the game faster, but you won't develop the crucial skills that will help you grow and sustain your business over the long haul. You need to show potential investors that you're capable of successfully managing a deal. Investors are looking for someone they can trust, someone who has hands-on experience in the property market. If you haven't been through the process of managing your own deal, how can you expect to manage someone else's money effectively? Without a solid foundation of practical experience, you run the risk of putting both your partner and their investment in jeopardy. Property deals can be unpredictable, and if something goes wrong, you could still be held accountable for paying back the investor, even if the deal doesn't go as planned. This is especially risky for beginners who haven't yet built a portfolio or developed a strong understanding of the market. It's easy to feel pressured to accept the first investor who offers you funding. After all, if you don't have the cash to get started, securing investment can seem like the fastest way to move forward. However, this approach can be risky. When you partner with an investor, it's essential that you have a strong understanding of each other's expectations and what each person brings to the table. You need to be aligned in terms of goals, timelines, and the specific details of the deal. If you're not careful, you might find yourself in a partnership where you don't fully understand each other, or worse, you don't know the ins and outs of the deal itself. Additionally, without a portfolio or reliable cash flow outside of your employment income, it's unlikely that you'll be able to offer the kind of security investors typically want. They'll want assurance that their capital is protected. If you lack experience, knowledge, or equity behind you, it's going to be difficult to provide that level of confidence. Instead of rushing into a deal, focus on building your own experience and capital. Prove to yourself and to potential investors that you can take a property deal from start to finish on your own. By doing this, you'll not only build your own confidence, but you'll also gain valuable insights into what works and what doesn't. Raising investment might be an option further down the line when you have a proven track record, but for now, focus on mastering the fundamentals. The skills and knowledge you gain from managing your own deals will pay off in the long term, helping you build a solid foundation for future success and growth. In conclusion, while working with investors can be an attractive way to fund your first deals, it's essential to weigh the pros and cons carefully. If you lack experience, relying on someone else's money can expose you to unnecessary risks, and you may miss out on crucial lessons that will shape your future success. Focus on gaining hands-on experience, building your own capital, and proving that you can manage a deal from start to finish. Once you've done that, you'll be in a much stronger position to attract investors and grow your property portfolio. Thanks for tuning in. If you found this video helpful, make sure to like, share, and subscribe for more property investment tips and advice.